Welcome Forex traders to Old Man Wisdom. Today I want to talk about the fear of missing out, or FOMO as it's often referred to in trading circles. The truth is that fear of missing out doesn't just apply to Forex trading, it applies to every aspect of our lives. But of course, as a Forex trader, the fear of missing out on a successful trade can be played out in our minds every single day. So what exactly is FOMO, or the fear of missing out, and how can we mentally get our minds wrapped around and overcome this fear that we might currently be experiencing? Well, what I'm going to do is I'm going to show you on a live chart, the Euro USD, just how the fear of missing out can play on our minds and cause us to lose even more trades and of course lose our money or our account. So let's take this chart as an example. This blue rectangle here represents when the market's opened this week, and what we was looking for is a buy opportunity because price is above the moving average here. The only thing I was looking at doing was buying the market. Now, at first glance, the market went up early Monday, and of course, immediately your mind is thinking, well, I should have bought the market when it first opened Sunday evening. So straight away, you're feeling like you've lost a trade. The market comes down, and of course, you feel better because if you had have bought up here, then you would have lost the trade. But once it comes down here, even though you know that you're looking to buy the market, what do we get? We get a sell signal. Now, the fear of missing out on a good trade might mean that although we're only looking to buy the Euro USD, we get this sell signal and we do indeed sell. We maybe put a tight stop loss, and what happens? Initially it goes down, we get all excited, and then it stops us out. So the fear of missing out means that not only have we taken a trade that we know we shouldn't, we lose money, we lose the trade, and then what happens? It goes in the apparent direction that the sell trade gave us just hours before. So what happens is, as the market now comes down and it goes below the moving average, what do? We think, well, this is the opportunity I need to sell here. So in the fear of missing out, we sell at a really bad price down here. And of course, what happens? The market goes against us quite dramatically and again stops us out. If we put the stop loss right up here, it looks like price would have stopped us out. And if we'd have put our price quite tight, just above the moving average, again, we would have got stopped out within hours. So the fear of losing out or missing out on a good trade means that not only do we lose money, we end up losing two trades. We lose confidence in our trading ability. We've gone against our rules. We've broken our trading rules. And of course, the fear of missing out will just continue. So the current situation on Euro USD is that it's now shot up in the last 3 hours. I'm still looking to buy the market. I could be saying to myself, well, look, I've missed all these pips. Why didn't I buy, over here or down here or over here? Why haven't I bought the Euro USD already? Why? I'm missing out. And so the fear could be that we buy now on this really strong push upwards by the euro. But of course that would be a mistake as well, because I'm going against my trading rules, I'm showing a lack of patience, and of course I'm giving in to this fear of missing out on a good trade. Instead, what I know I'm going to wait for is for the MACD to cross over not the 0 line, but the 3 pip line that I've plotted here on the MACD. So I know that price has to go quite a way before I'm even going to consider buying the market. Now it's currently Wednesday, And here is another problem that we get as traders when it comes to FOMO, or the fear of missing out. I'm thinking it's Wednesday. I've only got 2.5 days before the market closes for the weekend, and I haven't made a trade all week. In fact, I didn't even make a trade last week. So this is again where the fear of missing out comes into play. Because we've not traded for 1, 2, 3 days, or even 1, 2, 3 weeks, we become impatient and we see the market moving in great big moves like this, and we feel like we're missing out. So the danger is that we buy at this really dangerous point here, even though we're at a small high here. There's a good chance the market will reverse on us if we was to buy here. Doesn't mean that's what's going to happen, but our fear of missing out, our mentality, is obviously playing tricks on us. Instead, I know what I want to see, which is the market make small little moves upwards, and then I get the signal from the MACD to buy. Until that happens, until I get a buy signal, I'm not going to be interested. I'm not going to be tempted by the fear of missing out. So these are some of the ways then in which we can avoid making these mistakes. We have a trading plan that we stick to rigidly. We're not bothered if we haven't traded for days or weeks. We're going to wait for the best opportunities to make that trade. We're also not bothered if price moves in great big waves and we're missing all of it. We're just not bothered. We've got, again, a strict strategy, but on top of that, we've got this mental strength that tells us we're not bothered, because when we do take a trade, we're going to make a good amount of pips and a good amount of profit. So whatever the markets do, until we get a signal or until it matches our trading strategy, we're going to develop the art of being patient. So although this here is only 3 days worth of market movement, you can see that there are 2, 3 or even 4 times where the fear of missing out can affect us and we can make bad decisions. So if you take nothing else from this video, the lesson really is to develop a good, strong trading strategy, and of course to develop the quality of being patient, of not worrying if you're going to miss out, because when you do take the trade, you're going to make good profit probably 7 times out of 10. So if our trading strategy has been back tested and we know that most of the trades we take are good ones, then we're going to avoid this FOMO, or fear of missing out. So I hope that helps you. It's only a small short video. I just wanted to discuss how fear of missing out as a Forex trader can affect us and why we need to develop the quality of patience. So thank you for watching. Until the next video, of course, everyone take care and happy trading.